Whenever you're ready.
We're on, Dad.
We are on. Great. How about that? Dang. Comes up, doesn't it? Comes
hmm
up as you're getting all your stuff ready here at the last minute. So why don't you tell them who we are, Sam?
All right. Well, welcome everybody to Carolina Retirement Planners Happy Half Hour. I'm Sam Shukavage, and with me is my father, the president and founder of Carolina Retirement Planners. Hey, Dad.
Hey.
And then always with us behind the scenes is the lovely Miss Amy Dresky, our director of client fund, and she's back there making all the magic happen.
Hello.
Yeah.
Hi, goodbye.
If this is your first time joining us, a few things you should know is each week we give away 2 bottles of wine delivered directly to your door. Well, if you didn't enter this week, we do the wine drawing at the end. If you didn't enter this week, we will let you know how to enter for next time. So you can win 2 bottles of wine. Also, we don't know that you're here unless you say something. So feel free to type hi in the chat and let us know you're here.
And it's also probably worth mentioning that our topic today is how you can give the devil's money to charity. So it will be a good, entertaining one. But what we always start with some fun stuff before we plunge into that. And one of the things we do is ask what day it is. I don't even know what day today is. Amy, did you come up with a good day for today?
I did. There's so many great days today, but a lot of times I feel like the themes of the questions I ask, they overlap. So today is National Twilight Zone Day. So I asked everybody to give me their scariest or most memorable Twilight Zone episode. So we had some people that didn't really watch it, but we had some really good responses. So yeah, I think I'm looking at it now. The 2 that won was one that probably everybody is aware of. It's called Nightmare at 20,000 feet. That's the one with the creature on like the airplane wing. And they actually redid that for the movie as well. I don't know if you are anyway. And then the other one was Time Enough to Last. And that's like the post-apocalyptic. And the man is like, looking to, live forever kind of thing. It's kind of crazy. But some other good ones were like
They don't make them like that anymore,
No. Yeah, I mean, like when people were like replying with their episodes, I was like, oh my gosh, yeah, that was a good one. Oh my gosh, yeah, that one too.
When TV was young.
They were so great. So yeah, a lot of just great memories. And then I actually said, I took like a little half a day today and volunteered for my grandson's field trip, and I was like, oh my gosh, I remember the kick the can one, and it all makes sense now because those kids have so much energy, and if I could just like go back and have all of that energy that they had, it'd be great. So I don't know. But you guys, did you watch them?
I think it is still there. I mean, we have established for years now how our politicians are getting really good at kicking the deficit can down the road. They're really good at that. I just see them in Congress. They're down the aisle, just kicking that can day in and day out. So I don't know. Sorry, but I better not go there. If I do one on deficit, I should do one, and we should do one on deficit. But it gets almost so depressing when you start really looking at the numbers. But we're going to talk about something more fun today. Definitely more fun.
Yeah, I've been excited for us to cover this topic. This is a great topic. It warms my heart to be passing on this information to everyone.
Yeah, we had a lot of people that replied saying that they were really looking forward to this happy half hour. So it is going to be a good one.
Mm-hmm.
And just while we're here, we'll say hi to some folks. Skip has joined us, and Patrick, some regulars. Dan and Barbara here, and they are actually in Wilmington now, not up in the mountains. They're a moving target. And Mary, our own Mary, is good to see you. Debbie is here, and Jean, Carolyn, and is here with JP, and Teresa, our regular Teresa, is here.
Hi, Mom.
So It's a good start. Good to see you. What else anything else before we start talking about our subject you can think
I
of?
I don't think so today.
Okay, we'll plunge
Yeah.
back in and say hi to more as we log them in, but
Yeah. We do also have Nadine and Karen here. So hey y'all, thanks for joining us.
yeah. Um, Let me go see if we can get it to all work properly today.
Yeah, we did have some technical difficulties earlier.
Yeah.
Beautiful.
Well, just so there's no mistake, this here is the devil, and this here is God. And we were a couple weeks ago.
Thanks for letting us know. I mean, yeah.
Yeah, thanks
Yeah.
for clearing that up.
Yeah, thanks for that one. I appreciate that because I was a little confused.
Yeah, I try to be
We all really
explicit.
could have used a little clarity there.
You know, as you know, Sam and I spend a lot of time studying taxes and how to pay less in taxes. One of our favorite people is Ed Slott, who twice a year gets 500 advisors like us in a room and does tax, kind of teaches strategies, particularly with IRAs and things. And this past, it was about just 2 weeks ago or so, I was there. One of the advisors who was really an expert on taxes and tax strategies get up and talk for an hour or so. And he was talking about one of the tax strategies we're talking about today. And he said, yeah, it's taking the devil's money and giving it to God. And I thought, dang, that's a great way to describe it. Because, your God may be the traditional God. It could be the Cancer Society. It could be the animal shelter, any number of valid charities that you might want to give money to. But the devil, in all our cases, we consider the IRS. And I don't know if we should blame the IRS so much. Their job is just to go out and collect the money. Our politicians say we, hopefully collect enough money to pay all the bills the politicians are driving up for us. But this is more than giving money to God. It's many more things we should think about besides just helping your favorite charities. One thing we're going to see it brings us is how we might pay less in taxes, something we're all interested in. It'll show us how we can not only do that, but simplify our tax return and that whole process, and also how done correctly, it may help you pay less for Medicare and even taxes on Social Security and things. So this is more, this thing touches many things if done right. Now, what it is qualified charitable distributions, affectionately known as QCDs. That's the topic we're talking about today, is how we might use QCDs. And I thought it might pay to back off a little and spend a little bit of time talking about taxes and tax returns and how this all works together. So here we have your tax return. Every year you file one of these. And the way a tax return works, money comes in, you get to take some tax deductions. Two kinds of tax deductions. What are they, Sam?
Standard and itemized?
Standard and itemized. Those are the two kinds of tax deductions we have. And then after they take that, out comes an amount, and this is tax. What's left is tax. That's kind of how it works. But when the money comes in, we have what's commonly called the adjusted gross income, fancy name for total up all the money you have coming in before we deduct everything. And the the amount of tax we pay depends on what happens after deductions, but not all of it. Some of it actually is dependent on adjusted gross income. Sam, can you think of the two things that adjusted gross income might affect? In fact, we'll go to another one here. We'll say here we have income, we have adjusted gross income. What things depend on it? What taxes are calculated off of it before deductions?
Well, an easy one is the way that your Medicare premiums.
Yeah, Medicare Part B. That's the IRMA. What they do is they say, based on how much adjusted gross income you pay, every month when you reach 65, they take out, I think it's about $164 now a month usually out of your Social Security if you're collecting it, and that helps to pay for Medicare. And so 164 is what everyone pays, but if the adjusted income goes up above about $195,000 a year, they're going to automatically add $66 more to how much they take out. And these things keep changing, maybe higher till it occurs later, but the adjusted gross income before deductions are calculated by, are dependent on that. And so here's the tricky thing. And the other thing that's affected there is Social Security tax. Social Security tax is dependent on the adjusted gross income, or can be affected by the adjusted gross income. And I won't go into all the calculations, but this is one of the big ones. Now, when, do you got a table, Sam? What's the current, well, I know what it is. If you are bringing in income, what's the current standard deduction is about $30,000 for a couple that are 65 or older.
I think it's 30,700 this year.
Yeah,
You didn't
okay.
tell me you were doing this, so I'm not.
Yeah, I didn't. Now, here's the thing. If I want to give money to charity, if I want to contribute to my charity, well, I have to itemize. And basically, if I don't have total deductions totaling more for a couple over 65 of 30,000, if my deductions don't cover that, I can't deduct. It doesn't do me any good. I'm actually going to write that check to charity, but I don't get a deduction for it because it wasn't big enough. Okay, so and in fact, it's going to raise my taxable income, and I may pay more in tax. That's one of the disadvantages with this high standard deduction is if I just wanted to give 5,000 or 10,000 to charity, I may not see any extra deduction for that. In fact, I get 5,000 to 10,000 more in income, and I got to pay tax on that donation to charity before, I've got to pay tax on what I take out and give to them. What the QCD does is it says you can take money and give it to charity, and it kind of skips over your tax return. It doesn't really appear here, and it doesn't increase your adjusted gross income. So it doesn't affect your Medicare, and it doesn't really raise, you don't really pay taxes on it. It kind of skips over, it goes over top of your tax return.
Hey, Dad, it might be a good thing to point out that this is just exclusively with IRA money,
Yes.
not non-qualified, not non-IRA money, not regular money, and not money that is still in an employer plan.
Yeah,
It
if it's
has
in
to be in
401k,
an
you
IRA.
can't do it. You can only work for IRA money. And there's a bunch of other rules. We're not going to go into real nitty-gritty detail, but we're going to go into some detail. And one of the numbers that we need to talk about are here, 70 and a half. What's important about that number, Sam?
That is the age that you can do. Once you obtain this age of 70 and a half, you can start to do QCDs. That makes you eligible.
But wait a minute. I thought the minimum required distribution age has moved up to 73.
Yes, but the age with which you could do QCDs has stayed the same.
That's right. There are two different parts of the tax code. And when our politicians adjusted everything, they did one, but not the other. So 70 and a half is still an age that you can use a QCD to give money to your favorite charity. What about $100,000, Sam?
That is the current annual limit for QCDs.
So you can give each year $100,000. If you're married and you both have IRAs, you can both give up to 100,000. And does that number go up? That's been 100,000 for a while.
The Secure Act 2.0 just passed, and one of the changes to QCDs is that starting in 2024, this number will start to be indexed for inflation.
So that'll start going up more and more. So, but 73, what's again the importance of that number?
Well, that is the current RMD age. The year that you turn 73 is the year that you have to start paying the IRS.
You got to, the government said, hey, we let you have this tax deferred long enough. We need it to help pay down the $31 trillion deficit we've all enjoyed building up. And so when you turn 73, you actually have to take out about 3.77% of your IRA and 401k and everything else and pay tax on it. But if you use a QCD, to pay your RMD, it too skips over the tax return, but it counts towards your RMD. So you can use a QCD to pay your RMD, but you won't have to pay tax on that, and that RMD won't do things like increase the amount you pay. If you give it to charity, it won't increase the amount you pay for Medicare and other things. So that's another big advantage. When you do get to RMD age, we have clients that they just use this to pay their RMDs. They don't need the money. They don't want to be taxed on it, and they got charitable intent. So that's another addition here. What about $50,000, Sam? What's special about $50,000?
One of the other changes from the Secure Act 2.0 is that in your lifetime, you may make a one-time QCD of $50,000 that goes to what they consider a split interest entity rather than just a straight out charity.
And split interest sounds fancy, but what that is a charitable remainder annuity trust, often called a CRAT. And that's where you kind of put money into an account destined for charity. You can get income from it every year, but then it goes to charity when you die, and you get a tax deduction up front from that. There's a charitable remainder uni trust, usually called a CRUT. I won't go into the details, but it's just how you get the money. And then there's a charitable gift annuity. A lot of universities and things have it set up that if you give them money, you may get a tax deduction, and then they will give you an increase they'll give you income, and then they'll keep what's left when you die. And you can fund these with now your IRA using a qualified charitable distribution. Bunch of other rules, one time in lifetime, I think, Sam, and all that
Oh,
stuff.
there's a bunch of rules. If this is something that you're interested in, proceed with immense caution. The 50,000 from this QCD has to live in its own entity. So you cannot blend this 50,000 with current money you may have in a CRAT or a CRUT.
So
it has to live by itself.
It's a bit complicated, and if you want to do this, we can help folks do it, but it's not as easy as the plain old QCD where I just give money directly to them, but it's something new, and the government did not make it easy on us. Now, one of the things I want to warn, and I don't want to go into all the details, but I kind of want to say, hey, if you do a quality a QCD, a couple of things you want to watch out for. One is you got to report it on your tax return. It's not very difficult, but this is what I have here is the text, and down here in the really fine print is the site it came from on the government. If you Google, how do I report QCDs on my tax return, this will come up, but this is IRS text. But what they say is they report it to you on 1099-R, but that should show that it's a QCD. The money will come directly from the company that holds your IRA, and they will write a check directly to the charity. And you need to report it on line 4, and they got a bunch of ways you do it. You basically put it there, say QCD, but it doesn't appear in the totals on your thing. But you want to get this right because you need to get credit for it. So don't just assume you do a QCD and it's done. We have forms that we fill out for people every year when they're giving money that tells the company to send it, but then you got to talk to who's doing your taxes, and if you're doing your own, you want to be sure you know this. So it's just a letter to say, hey, not a big deal, but you better get it right. And boy, we also have the CWA. What is this called, Sam?
Contemporaneous written acknowledgement.
Yeah, boy, isn't that a thing?
Whoa, say
And
that
that's just
10
where
times
the
real fast. Whoa.
the charity says, hey, they gave us a donation and we didn't give them anything in return. We didn't give them dinner or whatever other things. So those are just some of the rules to do this. But I'll tell you, this is, if you're over 70 and a half and you have charitable intent, even more so if you're over 73 and you have a charitable intent and want to kind of avoid all those extra taxes and don't want to try to itemize and deduct, your IRA is probably one of the best ways to give money to charity. It just can be a very smart way to do it. The government has made it even easier and more common. So that's our little explanation of how to give the devil's money to God. So I hope this was helpful. This once again is where if you are a visitor to us, go to our website. We got lots of good stuff. And how many of these happy half hours have we done now, Amy?
Today is number 141.
Wow. So you can go there, see this one and the other 140 that we've done. If you bring the page up, you can search it for charity. We have other hints on charity. You can search it for, RMDs and Ross and many of the kind of wisdom we've put out. And we usually do the same format. We start with some fun, and about 6 to 8 minutes in, we get into the meat. And so you should know that's a resource. If you'd like to have more questions, or especially if you're a new visitor, want to say, hey, can I have a question, or you say, can you take a look at our situation? There's a phone number you can call our office and talk to Jerry or Mary or whoever who answer the phone. Okay, well that's QCDs. Ha.
Yeah.
Ooh,
Yeah,
good
I
stuff.
love this. I love you get to help, help charities and reduce your taxes. So I'm a huge fan. People are always asking, like, what is the, is there a way, how do I get money out of my IRA without paying taxes? How do I avoid taxes? And this is one of the very, very few ways that you actually can. So
And it's warm and fuzzy. Yeah, it's a good one. I like it.
Yeah. Yeah. And then many people are already giving money regularly or annually to a charity or giving money regularly to their church. So this just makes a lot of sense. All right. So is there anything else? Can I do the wine drawing?
It's time. It's
Is it
time. I'm sure everybody's anxious,
All right. So if you stuck with us, each week we give away 2 bottles of wine delivered directly to your door from Fermental Bottle Shop. They're located in the cargo district. You can go and, enjoy a beverage at their bar, in their garden, or you can pick stuff up and take it home. They're an awesome place. But if you win the wine drawing today, you don't have to go anywhere because they will deliver it 2 beautifully curated bottles of wine directly to your door. And to enter, each week we put out an email letting you know what our topic is. You respond to that email and tell us what your favorite Twilight Zone episode is. Or if you are on Facebook, you can, you'll see our event each week and you click that you're attending and we'll get you in here again. All right. So our winner this week of 2 bottles of wine delivered directly to their door is Paige and Edward.
Paige and Edward.
Congratulations.
So congratulations.
Yes, congratulations.
And what are we talking about next week? What's our next topic?
So next week, we're talking about the 4% rule, and does it still apply with all the changes that have gone on? What's the deal there? But you know what? In 2 weeks, on May 25th, we will actually be at Fermental. So make a little note. Yeah, come join us.
We'll be live at Fermental, so you are welcome to come. Check out the place, grab a beverage, find out some good spring and summer wine and beers.
Yeah.
It's I think our summer beer and wine, as opposed to our winter beer and wine, which we did 6 months ago. And I know that we had several clients and folks come and join us and shared in the tasting. So put that on your calendar. You may want to come and have a real live happy half hour with us. So
yeah, it's always fun. I love those. Those are great. It's good to see everybody.
Went well.
Yeah.
Okay.
Yeah.
Mother's Day is coming on Sunday. So everybody have a
Happy
great Mother's Day for your mother. Or everybody has one. So yeah.
All right.
With that,
everybody,
we're just about the top of the hour. We'll say cheers to everybody. Hope you have enjoyed the happy half hour, and we will see you 4:30 next Thursday.
4%. It's good.
All the inside story. I got the backstory on that. It's really interesting when you learn how it came about. It's just,
I'm excited. It's a good one.
All right.
All right.
Bye.
Bye.
Bye-bye.